Good day, my viewers. I welcome you to this tutorial where accounting topics are being treated. Therefore, the topic for today will be centered on the cash book. The cash book will be treating has to do with the single column cash book, or you call it one column cash book. Therefore, I have questions here to be treated. In the first instance, you have to understand the rules that guide the posting of the entries into the cash book. We're having the debit side, likewise the credit side. The debit side is meant for the money that comes in, that is the cash inflow, while that of the credit side has to do with that of the money paid out, that is the cash outflow. As a result of it, we are going to solve this very particular question. But before moving to the question, you have to understand a particular logic while you are solving your accounting questions. There's a particular thing which I terms W raised to power 3. The first W stands for who. That is, who owns the account. Anytime you are preparing any account, you have to put the heading by putting the name of the owner of the account. You have to put it there. It is very, very important. Secondly, which type of account are you preparing? Now, we are preparing probably, let me say, the cash book. Then, the third W stands for when. This when means which particular year are you preparing the account, or probably the month. This is where your marks begins. As an examiner, if an examiner wants to mark your questions, this attracts marks. You have to indicate this. Otherwise, take for instance, you are probably solving a question under trading account, or probably you are solving a question under manufacturing account, and all these headings are not, placed on each questions. Automatically, this might, make people to be confused. Aside from that, this is very, very important. Therefore, I will move to the solving of the question we're having for today. The question says, from the following particulars, compile the single column cash book of AY Enterprises for June ended 2024. From the questions, we could realize that the account is owned by AY. Therefore, you put this AY and Enterprises. Okay. Then, which type of account are we preparing? We can put it this way: single column cash book. Okay. Which particular year, or which year are you preparing the accounts? I will put it this way: for the month ended June 2024. Then we begin the solution to the question. Therefore, you underline this by beginning your question solving. Then this is the middle. Then I do it this way. Then I will also do this way. Okay. Then this place will stand for the date. Then this will be particulars. Then this will be ledger folio. Then we have amount. It's either you put amount or naira, or probably the currency you want to make use of. It could be dollars, it could be cedis. It depends on the question you are solving. Then you come here as well. You put the naira here. Then we have ledger folio here. Then here will be this place for date. particulars. Okay. Then from the question, the first entry says June 1st, cash in hand, 3,000 naira. This simply means the money that remains in the business as at May when the account is being prepared. As a result of this very particular amount, here we have June 1st. Therefore, we are going to have it this way: balance, then brought forward. It will be 3,000 naira, all because the money still remain in the business. As a result of it, you are going to put it on the debit side. Now, the second one, June 2nd, started business with cash of 2,600 naira. This one is termed as capital. Any money that is used to begin or probably to set up a business is termed to be as capital. Therefore, you are going to put such money here, capital. We have capital here. What is the amount? We're having it for 2,600. Then June 3rd, stationery bought 500 naira. This simply means AY Enterprises during the month of June, he bought stationery that worth 500 naira, meaning that during the course of buying the stationery, AY is going to pay to the seller. As a result of this will make the money in the business to be deducted. Therefore, we are going to have it here, June 3. We are having stationery 500 naira. Then June 4th, cash paid to ADEX 700 naira. This simply means during this very particular month, AY Enterprises paid 700 naira to ADEX. As a result of this will be a reduction from the money AY is having in his account. So we are going to put this as ADEX. June 4, ADEX 700 naira. Or let me do it this way. 500 naira, 700 naira. So that is how to input this. June 7, receive cash from Japson. This simply means on the 7th, AY Enterprises received money from Japson, 2,000 naira, meaning that the money comes in. We are going to put it here, June 7. We are going to put Japson. How much? 2,000 naira. Because it is Japson that paid 2,000 naira to AY Enterprises. Then, June 10, goods sold for cash, 3,200 naira. June 10. We have June 10. Goods sold for cash. This simply means cash sales, or you write only sales. Now, we have it for 3,200 naira. Then, on the 13th of June, AY Enterprises paid 900 naira for the electricity bill he has used for that very particular month. Therefore, we are going to put it this way: June 13, electricity 900 naira. Then another thing, by June 15, cash purchases 4,500 naira. This simply means during the month of June, AY Enterprises bought some certain goods in which he paid in returns of taking the possession of the goods. We are going to put it this way: purchases. So the purchases is 4,500 naira, June 15. Now, for June 16, paid wages and salaries 2,000 naira. This simply means AY Enterprises paid his workers, or probably some set of people that are working under him. He paid the salary and wages to them, which cost 2,000 naira. Therefore, you put salaries and wages 2,000 naira for June 16. Then for June 17, cash sales 4,000 naira. We are going to have it here. June 17, cash sales. We have it for 4,000 naira. Then by June 20th, bought motor vehicle, paying by cash 3,600 naira. This simply means during the month of that very particular June, AY Enterprises bought motor vehicle in which he bought for 3,600 naira. This will make the account, or probably the money he's having in his account, to be deducted, to be reduced. As a result of it, it's part of his payment. So you have motor vehicles here. Then the motor vehicle is 3,600 naira. That is June 20th. Then for June 25th, bought goods for cash 1,500 naira. June 25. AY Enterprises bought goods for cash that worth 1,500 naira. Just put good purchases or purchases. We have it for 1,500 naira. Then for June 27th, servicing and repairs 1,300 naira. June 27th. We have it for servicing and repairs. This cost 1,300 naira. Then for June 29, Wallace paid us 13,000 naira, meaning that Wallace paid AY Enterprises 13,000 naira. This is part of the money received by AY Enterprises. Therefore, you put it here, June 29. You are going to put Wallace, because it is Wallace that paid the money into the account of AY Enterprises, 13,000 naira. Now I'm done with the posting of the entries. The next thing is to balance up the account. Therefore, what you are going to do in order to do this, you are going to add all the figures we are having on the debit side, likewise that of the credit side. Then you can now take away the smaller number from the bigger one. Therefore, this is what you are going to do. In order to carry out this very particular task, come to this very particular area, then put your line. In order to balance it, do it this way. Then leave a particular, probably a line or two lines, leave it there. Then you come to this as well. Let it be on the same line. The total figure we are having here is 27,800. Then you are going to put the same thing there, 27,800 naira. Then you add all the figures we're having on the credit side together. The total figure we're having here is 15,500 naira. Then you take it away from 27,800. 800 naira. 3, 2. So we're having 12,300 naira as the balance. Therefore, all you are going to do, you come to this very particular area, then you write balance carry down 12,300 naira. By the time you had 15,500 naira you got by calculating all the figures on the credit side together, with this 12,300, you are going to have 27,800 naira. The next thing is to come to the date column. As you can see, that AY Enterprises is preparing its cash book for the month ended June. Therefore, what we are going to do, you come to this very particular date column, then you write June 30th. As we all know that June 30th is the last day of the June, this is what we are going to write here. You put June 30. Balance carried down 12,300. Meaning that at the end of June 30th, AY Enterprises is having 12,300 naira as his cash at hand, or the cash that is still in his business. Now, you now come to the debit side here, then you write the next month after June is July. Come to this place, write July 1st. This very particular balance, this balance carried down will be brought here. It will now serve as the balance brought down, which is 12,300 naira. This very particular balance brought down simply means that if AY Enterprises want to prepare for its cash book in the month July, this very particular balance will represent balance brought forward. As you can see from the question here, June 1st, balance brought forward 3,000 naira. Therefore, this June 1st, balance brought forward 3,000 simply means the cash at hand as at May, when AY Enterprises was preparing his cash book. The same thing will happen to this. This very particular July balance will represent the balance brought forward, that is cash at hand by the month of July, while AY Enterprises is preparing his cash book. For more tutorials on accounting, if you have found this video very useful, please kindly subscribe to my channel, give it a thumbs up, share the video with your family and friends, comment at the comment section. Thanks for watching. Bye for now.